prediction markets and funds want to hedge on a binary event. That's why you got the 30%, because someone needs to hedge something. Pressure on growth, but not to deliberately slow the economy. AI trade remains still the most important story, and people, of course, are having longevity doubts, but it still needs to work off that high level of growth, just like what happened in Korea, which had a sort of a margin call. And I think that's why stocks are stalling here. But to me, I think AI still works strongly through year-end.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The Fed kicks off its two-day meeting ahead of Wednesday's rate decision. Policymakers are widely expected to be steady, but the odds of a hike have climbed to about 1 in 3, 33%, up from just 16% a week ago. Joining us now, Fundstrat's head of research, Tom Lee. He's also the chairman of BitMine and a CNBC contributor. Tom, welcome. Would you take that prediction market bet, so to speak? What do you think? Is there any real chance the Fed hikes rates this week?
I think that, the prediction markets and funds want to hedge on a binary event. That's why you got the 30%, because someone needs to hedge something. But I'd say the probability is low. I mean, I wouldn't expect them to raise rates.
What about at any point in the future?
As you know, they're going to see how the data unfolds. So I don't think it's data dependence, but data responsiveness. To us, I think the underlying inflation story has really weakened because shelter is really weak, and we'll see it tomorrow with Case-Shiller. And if wages aren't pressure, then the real pipeline of underlying inflation that we're seeing now is just tariffs and oil, which aren't things the Fed has to necessarily embark on a hiking cycle for.
Potentially, I don't want to use the bad word of transitory. They're potentially temporary, right?
Yes. And
oil is down right now because there's some talks. And by the way, tomorrow could be up again. We have no idea what's going to happen. Depends on the talks. But the point is, if and when there is lasting sort of peace, oil will likely go back down. The market seems to want to push it back down. That's got to impact the Fed's thinking.
Yeah, because then they just have to see this little bubble that they have to kind of manage through. I mean, I think in some ways they might just shrink the balance sheet instead of doing a policy rate change.
A quantitative tightening?
Correct. Yeah, I think that's a better way to titrate. What they might say is like, hey, let's try to put some pressure on growth, but not to deliberately slow the economy.
Is that any kind of thing that can really upset the stock market?
The stock market's going to ultimately see the idea that, hey, the Fed shrinks the balance sheet, and then that means they can cut rates. And so then they'll see the rate cuts as actually positive. So I think it's going to pave the way for future rate cuts, actually.
So if the Fed is not the number one most important thing for the equity markets right now, what is?
Well, I think that the AI trade remains still the most important story, and people, of course, are having longevity doubts. But, if someone goes back to 94 to 2000, there were many times when the internet story and even stocks like Cisco came under question whether there was durability. And I think we're in that questioning its durability at this moment. But I think it's still in very good shape. And I think the second big story out there is that margin debt still needs to work off that high level of growth, just like what happened in Korea, which had a sort of a margin call. And I think that's why stocks are stalling here. But to me, I think AI still works strongly through year-end.
Perfect segue. We had this morning, Steve Eisman was on Squawk Box this morning, the famed investor. Here's what he had to say when he was asked the major question of the earnings season, which is what happens if big tech starts cutting its AI capex.
NVIDIA, I think when they reported last quarter, had 85% revenue growth. So if the hyperscalers cut, it wouldn't be 85%. And, maybe that would be healthy for the long term, but I think the market would go straight down on that news.
Just curious for your thoughts, reaction to that. And whether you think that's even likely or worth discussing at this point versus what Google did, which was raise and still get punished.
Yeah. Well, so on the one level, I'd say I think Steve's logic, there's some logic to it. But the fact that many people are saying that is a sign that we're not at a top because people are questioning the longevity of the cycle. So I think that's actually a bullish thing. The second is it probable? I'd be doubtful that there would be the cuts because, these companies still have access to the bond market and the bond market isn't denying them capital. So As you know, CFOs raise money when they can, not when they need to. So I think the spending visibility is going to be very strong.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Now to talk market technicals and, different markets. Maybe we'll get to, who knows? We'll see how we're feeling about things. Maybe Bitcoin, maybe oil. Katie Stockton, founder and managing partner at Fairlead Strategies, as well as a CNBC contributor. I keep having to sort of rouse myself to pay attention to the S&P. So it crossed 7,500 in May. We're at 7,500, and I think it's almost August.
It has been a really persistent trading range or consolidation phase, and it got pretty coiled up, which means that it was like a converging consolidation phase. Now it's broken down from that. We're
below the 50-day moving average, but it's been out of sheer boredom that it's finally doing that, right? There's nothing happening. Does that make it less consequential, or
it's been really like sticky right there, right?
Yeah.
But no. So now what's happened with that breach of the 50-day moving average, in addition to some other short-term support, there are new downturns in the weekly indicators, and that means that it's probably more of an intermediate-term issue versus just a short-term issue. We have a weekly MACD sell signal for one. Those usually are intact for several weeks. So that's our timing for, I think, more corrective price action based on what we're seeing.
Is it a duck where it's like putting me to sleep, but its feet are going furiously? Because the NASDAQ 100 is sending a different signal, isn't it?
Well, now they've lined up. Right.
They have, but
they have.
Is the 100 is close to a correction?
Well, we have a downdraft already of more than about 10%.
More
right?
than 10%.
So we're at that point where it's in correction territory in our work. We'd already seen the same loss of momentum that the S&P is now suffering. So it doesn't really bode well, of course. Maybe it doesn't need to be as dramatic for the S&P 500. We've had those mega caps step in initially, and then there was enough rotation to keep a bid to it in general, and earnings have been somewhat mixed, I guess. So I think there's still risk to the downside for the NASDAQ 100, and that it's a bit too early to get excited about the downdraft as a buying opportunity in the AI trade.
I mean, it used to be, software, but chips are okay. Now it's, what's okay now in that AI trade?
No, well, now in the AI trade, I'd say not much is okay right now.
Even Caterpillar shares have gotten knocked.
Yeah, but give it a few weeks, right? I think that will be the upside leadership coming out of the corrective phase.
Is it time we need to watch for, or you think there are additional drops that need to show up before?
I think additional drops for the most part because of these relatively new signals. Yeah. For the NASDAQ 100, the next support is between about 5 and 6% below. That's been a level
off, what, about 10%?
That's right.
Behind?
So it's really, it could be still downside follow through, but maybe not as dramatic as what we have seen. I think that initial sort of sentiment shift has already been absorbed to some degree from the AI trade. So still has downside based on our indicators. But what we look for are intermediate term oversold conditions and then a little stabilization. So short term momentum improving. And we don't have that yet.
How did Bitcoin do in terms of improving sentiment? Because it was 58,000 or so, got back to 65, and it's been 63 to 65. It seemed like sentiment got really negative at 58 or 59. That's where everybody was interested in selling, even though they wanted to buy it at 100,000. They won't buy it at 59,000.
And there is market psychology for you.
Is it out of the woods at this point, or?
I think there are some real signs of downside exhaustion for Bitcoin from a long-term perspective. And the lack of correlation to the NASDAQ 100 I see as a positive as well.
That's starting to happen because it used to be
it's come way off.
It has.
Way off. And I think it comes in part from the fact that the NASDAQ had such a strong up move and Bitcoin had such a strong down move. So now Bitcoin is stabilizing and perhaps has reached a level at which it makes sense for it to base. That's in that kind of 50,000 or 58,000 area as initial support. And we are seeing improvement in our short to intermediate term gauges. So we're more constructive Bitcoin, short to intermediate term, more neutral still long term until we see more evidence that that's a long term turnaround.
You're not just feeling better about it because you have this new product, are you?
No.
What is this
The
thing?
product is really kind of trend
The
agnostic.
Fairlead product?
It is. It's called the Amplify Fairlead Tactical Bitcoin ETF.
Oh my God.
BNAV, BNAV, brand new today.
And tell me how it works. You're advertising it as maybe less volatile than owning just a bit.
I think more importantly, it's about finding the momentum when Bitcoin's exhibiting it and leveraging up in that kind of environment.
Less leveraged if it's in a downtrend.
That's right. Or a range, right? So when the indicators aren't lining up across time horizons, we will be underexposed to Bitcoin, but always with a base level of exposure of about 70%. And when the momentum gauges and our trend following tools line up across timeframes yet again, then we will use leverage.
Well, you could do that just with the spot. I used to have a friend who had a company, and their investment motto is, we like to be more heavily invested in rising markets and less invested in falling markets.
Don't we all, right?
That's like the dumbest thing I've ever heard anyone in terms of that. That's why I made fun of it so much. It's like no kidding, Sherlock.
So it's a model-driven strategy.
You get more exposed in a rising, but you look at actual indicators that give you some confidence that you're in a rising.
And you know our methodology, all technical analysis driven. So we are very closely watching these trend following
And then
devices.
you'll go to 70% leverage.
It will toggle up when the market warrants it. And this is something that's new to an ETF wrapper. So there's a lot of ETP, so exchange traded products. But this is an actual ETF under the 40 Act. So it's under those regulations. And of course, it's easy for folks to access it, just like it
came up.
Stock.
It came up.
There you go.
And you
As
can
of
buy.
today.
I could call somebody Schwab. We like Rick.
Yeah.
Let's say him. So you could.
Rick Worcester.
Yeah. So you call Schwab. Buy me some Amplify Fairlead Tactical Bitcoin ETF.
We'll call it BNAV, yes.
BNAV.
BNAV. We're staying with that whole navigational theme that we have with our first ETF, which is the ticker TAC, TACK.
Now, why does oil have such a hard time going to 150?
You know, the why question isn't for me, but what's going on with crude oil, you know, it's pulled back sharply from some short-term resistance around 90. Yep. I think it's going to make a higher low above support around 67. And that's because we have very significant improvement, if you want to call it that, in our long-term indicators. So that monthly MACD, for one, has shifted to suggest that this is a different environment for crude oil.
Is it MACD?
The MACD, so that's moving average convergence divergence.
The hip-hop guy?
No.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.